mainly understand this. There are only two basics of your complete ABM. Two basics, numericals wise. One is the correlation regression I took, and that some basic questions of statistics, parameters, all those things. And second basic is this ratio analysis. If you understand these two topics, then whole CIB numerical part, it is based on this only. Okay, so let's move on without wasting the time. See this again. I'm coming to this same topic because I'm daily stressing this because the registration is nearby. Okay, so remember the elective which you will be choosing, choose it as per your comfort, in which you have some stronghold, you know something. Okay, so choose accordingly. Mainly, I'll tell you, this HR is mainly theoretical, central banking is theoretical, IT it's also theoretical a bit. Yeah. Rural we have some numericals, and risk many numericals. Okay. So these three are theoretical: HR, IT, and central banking. Okay. So choose accordingly where you are comfortable with. Don't choose anything as per your wishful thinking. First, your job is to clear CIB, and afterwards you can gain the knowledge. Okay, if you want, you can. Yeah. 1st April, Anand. 1st April we'll be starting. Okay. Yeah. So yesterday we did this ratio analysis. Remember, today what we are taking, yesterday what we have taken, even the before that what we have taken, that will be useful to you when we study the actual topic. Okay, when we'll go through the actual topic, because statistics, parameters, then this correlation, these are the basics of any statistical part, and ratio analysis is the basic of any this lending part. Okay, so yesterday we went through this also, all these parts, right? So today my main aim is to cover some numericals on this. Okay, before that, everyone download Adda 24/7 app on your mobile. You'll have premium study material, live classes, ebooks, tests, everything, whatever you require. Okay, for clearing JIB and CIB, you'll have it over there. Okay. Also subscribe to Officers Adda 24/7 YouTube channel. In this channel, remember, you are getting the latest updates on JIB and CIB. And number two, very important, free YouTube series. I am personally taking free YouTube series at 6:30 a.m. in the morning for JIB, 7:30 a.m. in the morning for CIB BFM, and 8:30 a.m. in the morning for CIB ABM. Okay, so subscribe to this. Click on the bell icon. Let's start. Determine the debtors turnover ratio if the closing debtors is 40,000 and cash sales 30,000. Cash sales is 25% of the total sales, and excess of closing debtors over opening debtors is 20,000. Now, what do I mean by this? These problems here, such problems you will be getting one-liners in exam. So when you get such problems, you should be prepared for this. Okay. So how do you prepare for this basically? How do you go about it? Yeah. So what is debtors turnover ratio basically? Debtors turnover ratio here, it's from year only. That's what I said yesterday also. I told you this turnover ratio. Debtor turnover, creditor turnover, and debtor period. I told you three are important ones: inventory, debtor, and debtor period. So these three which are important, you'll always get these problems on this. Okay. Who can try it now? Everyone. On central banking, I have given the this what videos, recorded videos. There is no live class on central on electives. Recorded videos are available to you because there is no time actually. Within 2 months, it's not possible to take everything. Recorded videos, they are same as that of the live class. Okay, so you'll get it in Mahapak, but okay, yeah. Chalo, move on. Everyone, try this problem. Take calci pen paper in your hand. Everyone try this problem. Okay? Everyone, because these are the basics. Always remember. These are the basics. You have studied this in JIB, some part at least, okay? So who can give me, let's calculate it over here. DTR I'll call it, debtor turnover ratio means DTR, okay? So DTR equals to what? Basically, debtor, what is a debtor? When does a debtor come? Debtor comes when I sell something in credit, udhari. When I sell something in credit, only then I'll have debtors. Suppose if you purchase something in cash, you won't be a debtor creditor relationship. It's a simple sale relationship. So DTR comes when there is something in credit. Okay. So what is the formula for DTR then? Credit sales. Remember this. Credit. Always remember. Credit sales upon average debtors. Average. Okay. Average debtors. Credit sales upon average debtors. Now what is credit sales? Let's find out one by one. What is given? Cash sales equals to 30,000 is 25% of total sales. Means what? This cash sale, I'll write it over here. Oh, here my photograph is reflecting, right? I'll write it over here. Okay. So, okay. What is total sales? Let me write it T over here. T equals to cash, CA, cash plus credit, right? Any total sales will be cash sales plus credit sales. But what is given? Cash sales is given as 30,000, and this is what? This is 25% of total sales. So what does it mean? Cash sales CA equals to 0.25 of T total sales, 25% of this. So what will I do? I'll write it over here now. T equals to 0.25 T plus credit sales, right? So now I'll find credit sales. Okay. So if I find, I have to find credit sales. So firstly, here we have cash sales equals to 0.25% of credit sales. 0.25 or yeah, correct. So here I can find the T actually. See this. So 30,000 equals to 30K equals to 0.25 of T, right? 30K, 30,000, right? So my T becomes what? So T becomes total sales becomes 30 upon 0.25, right? So what is the answer? What does the answer becomes? 4 times, right? So it becomes what? 120. What is the answer you're getting? Everyone's getting this? No. Yeah, credit sales is 90,000. That's right. Say this. So it becomes 1,20,000. Total sales becomes 1,20,000. Okay. This is my total sales. So I have to find my credit sales now, because why I require this credit sales over here. So T minus 0.25 T, so it becomes 0.75 T equals to CR, credit sales. So I'll write it CR equals to 0.75 into what is T? 120. 120K, I'll write it. Okay. So it becomes what? 75%. So 90K. So 90,000 is my credit sales, right? So now I've got my credit sales. But what about average debtors? Average debtors means what? How do you find the average of anything? Okay. Average debtors is found out using anyone? How do you find the average? Yesterday we saw something in that, those some day before yesterday we saw it, right? How do you find the average? Average is found out using which formula? Average equals to opening plus closing upon 2, right? So my average will be here. Average debtors equals to opening plus closing upon 2. Okay. So what is opening and what is closing? See this. What is given? Closing debtors is given. See this. Closing debtors is 40,000, right? And excess of closing debtors over opening debtors is 20,000. So closing debtors is 40,000 and this is excess by 20,000 over the opening debtors. So take this, opening equals to closing plus 20,000, 20K. That's what is given in the problem. Opening, sorry, did I take the reverse one? No, yeah. One sec. It should be reverse, right? closing equals to, it should be opening plus this, right? So I'll change these over here. Okay. So now closing equals to opening plus 20k. So what am I having now? I'm having closing data of 40,000, right? So 40k equals to opening plus 20k. So my opening becomes what? Therefore opening equals to 40 plus 20, 60k, right? So open, oh sorry, minus, what am I doing here? Minus 20k, right? So 40 minus 20, 20k. So now my average becomes what? Average equals to, so average debtors, okay, equals to, what is opening? 20. What is closing? Closing is 40. Are you getting this answer? How many of you have got this answer? 40 plus 20 is 60. 60 upon 2, right? 60 upon 2. So 30. 30k is my average debtors. How many of you have got this 30k answer over here? Everyone. Debtor means we have to receive payments. Correct, correct. Yeah. Debtor means we have to receive the payment. We have sold the material to them, right? And they are yet to pay us. That is called as debtor. Yeah. Okay, yeah. So move on. So average debtors I've got it. Now what? Now it's simple. What I want is determine debtor turnover ratio, right? So DTR. So DTR equals to credit sales upon average debtors. So DTR equals to, what is my credit sales? 90. 90k upon what is my average debtors? 30k. So my DTR becomes what? 3. So this answer will be over here. Say this A 3 times, right? Debtor turnover ratio becomes 3. Got it? Everyone clear? Debtor turnover ratio. Got this answer? 3 is to 1. Correct. Now I'll tell you something else. See here. These ratios and everything you can definitely get it. It's not that difficult. Tell me one important thing. What do you mean by this debtor turnover ratio? What do you mean by this? What is the actual meaning of this? The meaning of this is, remember, I'll give you one simple logic over here. Okay. Meaning of this is, in a year, how many times my debtor pay me? See this. If these are 12 months in the year, one, and I'll write all these 1, 2, 3, 4, forget everything. Okay. So there are 12 months in the month, in a year. Okay. So 0 to 1 to this, all these things. Okay. So now when my DTR is 3, what does it mean? It means that my debtors are paying me 3 times in a year. 3 times in a year. You must understand this first. Okay. My debtors are paying 3 times in a year. Means in how many months will they be paying me? 1, 2, 3, and 4th. 4th month average they'll be paying me. One payment they have made. First payment. Second payment they'll make me when? The 4th, 5th, 6th, 7th, and 8th. So 8th month they'll be making me the second payment. Second. And third payment they'll make me on the 12th. So that is the meaning of this DTR. When my debtors are paying me in a year, so I have to take the average always. Okay, got it everyone? Sure, meaning of DTR is very important. Okay, otherwise if you don't understand DTR, you all will collapse someday. Okay, I'll give you a problem. Okay, let me see how many of you have understood DTR. Okay, inventory used 3 times. No, just a clarification. It's not inventory. It's debtors are paying me 3 times. Okay, debtors are paying me. There are two ratios separately. Okay, I'll cover this now. Let me come to this problem also, because as you have raised this question, okay, inventory. Somebody has told me about inventory. Okay, so let me clarify that point also. Now, with this problem, it will be clear to you. Inventory turnover is okay. See this. My inventory turnover. See here, this problem I'm designing right now only. Inventory turnover equals to, let's say, 3, and my debtor turnover DTR is, let's say, 2. Okay, my inventory turnover is 3, my debtor turnover is 2. Now tell me, will I require a CC? Will I require cash credit? CC. See here, this problem is just now I prepared it cash credit because this is a basic. This problem will teach you what is inventory turnover and what is debtor turnover. So my inventory turnover is 3. What does it mean? What does it mean that by inventory turnover equals to 3? Will I require the CC? Who can give me the answer now? I'll explain you. Not an issue at all because this is the foundation class. Your foundations need to be very clear about it. Okay, that's why we are here, isn't it? So, who can tell me now? You have studied accounts in JIB. Everyone has studied accounts. Not required. Okay, not required. How many of you are saying no and how many of you are saying yes, required? How many of you say yes, required? Okay, I'll explain you. See here, it's very simple. Very simple. See this. These are 12 months. Let me mark this here. If you see the picture, you'll understand the things. This is 0 and this is 12th month, right? What does it mean? Inventory turnover is 3. It means I am shifting my inventory, replenishing my inventory 3 times a year. Means after how many months? 12 divided by 3, 4 months. So let me draw this. This is what? 6 months. This is 3 months. This is 9 months. This is 1. This is 2. This is 5 and 6. This is another one. And this is the last 2 months. Okay. So now we have 12 months. So inventory turnover is 3. It means what? I am replenishing my inventory, changing my inventory after every 4 months. Here I am changing my inventory. Okay. So here let's say I am changing inventory. I'll write it over here. I. So this inventory when I change, I assume that I have to pay it in cash. I'll have to pay this cash to this person from whomever I'll buy this here. Inventory replenishing means what? I will buy the goods, raw material, I'll buy it. Okay, I'm buying the raw material. And DTR equals to 2 means what? These guys whom I'm selling my material, when are they paying me? They are paying me upon 2. So 6 months. So I'll get this money after this DTR, debtor. Okay. So I'll get this money in the 6th month. But here, this guy, I have to pay in cash. So what does it mean? It means that these 2 months, I don't have any cash. I'll write it below. Okay. So that I can explain it properly. No cash. So if I don't have the cash, what is the job of the bank? Bank's job is wherever there is a, what do we say that? There's a word. Bank comes in wherever there is a working capital gap, right? I'll write it over here. Working capital gap. This word is a basic in CC. You must always have the working capital gap in the customer's balance sheet and P&L accounts. If there is no gap, then you don't have to give any CC. But here there is a gap because this guy has to bring the raw material after every 4th month, and these debtors are paying him after 6 months. So these 2 months he doesn't have any cash. So that's why I'll be requiring this CC for these 2 months. After these 2 months, I'll get the payment. I'm okay over here, right? So I'll be requiring the cash if I'm having the working capital gap. This is very important term, everyone. Okay, pay attention to this. Got it, everyone? Yes. You need to understand here. My question was here not to just ask you required or not required. My logic or my question, I had raised it over here because I wanted you to know, understand what do you mean by this gap. Okay, I'll ask you a reverse question now. Reverse question. If my ITR, inventory turnover, is let's say 2, ITR is 2, and DTR equals to 3. Reverse thing. DTR equals to 3. Do I require a CC now? No. Why? Because ITR equals to 2 means what? I am changing this inventory after 6 months. But my debtors are paying me after 4 months. So I'm getting this payment earlier only. Whenever I'll be changing this raw material, I'll have cash because I've been paid by my debtors. So that's why I won't be requiring this CC over here. If ITR equals to 2 and DTR equals to 3, I won't be requiring the CC. But Reverse case, if inventory turnover is more and debtor turnover is less, then I'll be requiring the CC, definitely. Isn't it? Got it, everyone? Very basic. And here, in exam, in your JIB and many books also, you might have read everything. You might have learned the formulae. I don't means this fight about that. Okay, you might have learned it. Anything. That's okay. Very good. But the point is, CIB is not about learning. CIB is about understanding. Okay. Similar questions can be raised by me on various topics. Okay. Like next one, liquid assets is determined by what? What is liquid asset? Yesterday I showed you all that balance sheet, right? What does liquid asset contain? Okay, let me write it over here. There were 4 parts in the balance sheet, right? So remaining 2 parts I won't show it because this was one, this was one, this was one, and this is are of importance, right now. So we had I'd shown you 2 parts over here. This complete was called as current assets, right? And what was that complete? Can anyone name these? 4 things I had mentioned. 4 things. Yeah. Can anyone name this? Liquid assets. Okay. What were the 4 things? No, don't jump to the answers here. Many of you are jumping to the answer right now. A, B, B. No, no, no. Don't jump to the answer. Never ever try to answer immediately. Okay. First think over it. Always keep the habit of thinking. Okay. So what was there in current assets? Inventory, right? Then second, prepaid, right? Prepaid. Then I had what? Cash, right? Cash. And then I had what? Debtors, right? So these two, what did I say? These two I said these are liquid assets. But liquid assets are a part of complete current assets. So now if I have to get this liquid assets, what I have to minus? This current asset minus this inventory minus this prepaid, right? If I subtract this, then I'll get this liquid asset. So what is my formula required? Same thing. Current asset minus stock. Stock and inventory means one and the same thing, okay? Minus stock minus prepaid. So the answer is what? What is the answer? Yeah. Term loan EMI. Don't take term loan EMI over here. Term loan EMI comes in current liability. This is current asset, okay? Current liability means what I have to give. Current asset means what I'll be getting. Okay? There. So my answer is A over here, isn't it? Current assets minus stock minus prepaid gives me liquid assets, right? This part. Kindly, those who have not watched the YouTube video is available for yesterday. Okay? Yesterday I've taken all that balance sheet, P&L, trading account, everything. Okay? Kindly follow it again, everyone. That was the basic of any banking. Okay? If sales is rupees what? 10 lakh or 1 lakh? What is this? 10 lakh. If the sales is rupees 10 lakhs, sales returns is 50,000. Profit before tax is 2 lakhs. Income tax is 40%. So the net profit ratio is, what is this? Who can give me? Who can give me? This is something very tricky one, okay? Very tricky one. So net profit ratio is what? Firstly, what is net profit ratio? Net profit ratio equals to net PR, okay? Okay, let me write it only this much. Net PR equals to net sales, right? Net sales, not net sales, net profit NPAT upon net sales into 100, okay? Into 100. Net profit upon net sales into 100. So now what is this net profit? Net profit is given as what? Is it given something like this? Sales is given, sales return is given, profit before tax is given, income tax is given. So net profit, it's very easy now. Let's find out each one. NPAT. NPAT means what? Net profit after tax. Means what? EBIT. EBIT, earnings before interest and taxation, minus interest minus tax. That is NPAT. Yesterday, again follow yesterday's lecture, right? So EBIT minus this. Inventory means stock material, which I am having raw material, When I'm running a factory, suppose if you are running a Maruti car, Maruti factory, then you will be needing tires, you'll be needing steel inventory. So that is inventory. Okay. So EBIT, earning before interest and tax, minus interest minus tax. So what is given to me now? What is EBIT given? See this, profit before tax is given as 2 lakhs. So 2 lakhs, now should I write this 200k, isn't it? No, 2 lakhs. Let us keep it simple. Minus interest is given or what? No interest is given. So I'll take this 0. If nothing is given, take it 0. Tax is what? 40%. So 40% of what? 40% of what? Of always profit. Okay. So EBIT. So it is EBIT. Right. So 40% of this, whatever figure is given to you. So 2 lakhs minus 40% of 2 lakhs is what? 4 to the 8, 80k. Right? So 2 lakhs minus 80,000. So what is your NPAT you are getting, guys? 2 lakh minus 80,000. It is 1.20 lakhs, right? 1 lakh 20,000. 2 lakh minus 80,000, 1 lakh 20,000. So NPAT becomes 1 lakh 20,000. Got it, everyone? Net profit after tax is EBIT minus interest minus tax. Interest is nothing is given about interest. So 0. Tax is given 40%. 40% of what? 40% of total EBIT earnings. Tax is always on the profit. So this profit is what? 2 lakhs. So 40% on 2 lakhs. So 80,000. So 2 lakh minus 80,000, 1 lakh 20,000. Got it? After this NPAT, I am having net sales. That is easy. What is net sales? Net sales equals to total sales, total, total sales minus sales return, right? Yesterday we saw it again. I've shown all these things yesterday. Okay, that's why yesterday's lecture is very important. Total sales is what? 10 lakhs minus sales return is what? 50,000. So what is my net sales? 10 lakhs minus 50,000, 9.5 lakhs. Got it, everyone? Net sales is 9.5 lakhs. Got it? Are you with me? Type yes in the comment section if you're understanding this, everyone. I'll just wait, check. Are you with me, guys? Yeah. Okay with this? You all are getting whatever I'm teaching because this is a basic. Okay. I know many of you have learned these things in your JIB, but learning is different than understanding. I always believe in that. Okay. So I feel you must understand this first. Okay. Let's move on. Okay. Now let me go to this part. So now what? Now what is remaining? Nothing is remaining here. What is this? Just put the figures, isn't it? What are the figures now? Who can give me the answer now? Just NPAT means 1.2 lakhs upon 9.5 lakhs into 100. Put the figures. What is it you are getting? So put the figures 1 lakh 20,000. I'll put it right better way now. Upon 9 lakh 50,000. What is the answer you are getting? Can anyone give me the answer over here? I think so. It is what? Yeah. What is the answer you are getting, guys? Everyone. Sales return means here. Sales return means what? Sales return means whatever I have sold. Take the same example. If you buy something on Mintra, okay, or any shopping, okay, and if you don't like it, it is not as per the expectation. What will you do? You'll return it. So that's called a sales return. So what is net sales? Net sales means whatever I have sold minus whatever has been returned, isn't it? That's sales return. So answer is 12 point this, right? 12.63. See this figure I have mentioned it over here, 120 upon 950. This was an important figure over here. So got it, everyone? Next one. Higher the ratio, more favorable it is. Doesn't stand true for means all the ratios whichever are higher are good for the company. But there is one ratio in this, which if it is higher, that is bad for the company. So what is that ratio? Which ratio is that? Operating ratio, liquidity ratio, net profit ratio, stock turnover ratio. So which ratio, if it is higher, is good for the company? Who can answer me? Of course, I'll explain you. Not a problem. Okay. Who can answer me? Be cool. Ekdam. Be very calm about it and think over it. We must know the formula first for each of these. Okay. Okay. Let me give you one by one. Operating ratio means what? Operating expense. Now you'll understand immediately. Operating expense, right? Operating expense. Now you'll everyone will know this. Once I say this operating expense, immediately everyone will get the idea. Right? Yeah. I know it. So now everyone will get the answer. Upon operating expense, right? Upon total, where is it? Yeah. Upon total profit, you can write it. Any of the books do profit also. So operating expense upon profit. Liquid ratio means liquid assets upon current liabilities. Net profit ratio means net profit NPAT upon sales. Net sales you can write it. It's one and the same. Okay. Stock turnover ratio means the inventory turnover ratio. Okay. Means cost of goods sold upon this is average inventory. Average inventory. See here, I am remembering this ratios. Why am I remembering this? Because I have taken almost 37 batches. Okay. I have taken almost 37 batches for CIB. So that's why these are by heart to me. Not only batches, I have worked in various banks and corporate finance only for almost 3 to 4 years. All these were daily routine for me. So that's why these things are easy. But for you, what you have to do is you have to keep that slide, yesterday's slide which I gave you. You have to keep those slides and then think over it because that's important. So, what is the answer? Now I've gave you the formula also. So, if operating ratio is higher, what does it mean? Operating expenses are higher. So, is it good for the company? If expenses are more, is it good for the company? Right? So, it is bad. So, in that case, the answer is only this. Okay? So, it's only this. So, operating ratio, if the expenses are more for any company, that company doesn't like it at all, isn't it? So that's why operating ratio, this ratio does not apply in that category. Given sales is 1,20,000 and gross profit is 30%. So the GP ratio is now this ratio, if nobody understands, it'll be a it'll be a basically uh, JIB certificate will needs to be taken back. If this ratio, if nobody understands, JIB certificate, all of you will have to surrender. Okay? GP ratio. Who can give me the answer? GP ratio is GP upon sales into 100. Who all are going to surrender their who all are going to surrender their JIB certificates? Yeah? Who all are going to surrender their JIB certificates? Everyone. Everyone, yeah? Who's this? So, hmm, correct? Gross profit is what? 30,000, right? So 30 upon sales is 120 into 100, right? 1 za 4 za, right? 1 za 4 za, 4 za 1 za 25 za, right? Who wants to submit give again JIB? Who wants to give JIB again? The one who didn't get this will have to give your JIB again. Okay. Forget it. Joking, forget this. No one, nobody wants to give JIB again. That's the right thing, yaar. Nobody wants, okay? Because once cleared is cleared. That's it. Okay? Means, do you know something, you guys? Means what these JIB persons are planning, IIBF is planning, means it's still in the thinking stage. What they are planning is the JIB certification, CIB certification, it needs to be kept for a limited hours, limited years. Means suppose if I clear JIB now, yeah, suppose if I clear CIB today, okay, so it will be valid for next 5 years. After 5 years, because what the logic, because I had been in one of the seminars. It was a thought brought in at that time that if, as the technology is changing every 5 years, right, every 5 years it's going to change. So what they were saying, as the technology is changing, then the problem over here is this certificate. Yeah. as गए वापस देने में दिक्कत नहीं है. हाँ, correct. चलो, let's move on. Yeah. If the selling price is fixed 25% above the cost, then the gross profit ratio is, selling price is fixed 25% above this is a simple one, above the cost price, then the gross profit ratio is, say this. Firstly, what is gross profit? Tell me. Sure. Basic. Let's come to the basic equation. Cost plus profit equals to sales price. What is sales price? Cost plus profit equals to sales price, right? So what is given? Cost selling price is kept 25% above the cost price. So what does it mean? It means that if my cost price is rupees 100, eh, and what 25% more, na, plus this P equals to, they have kept 25% above. So my selling price has become 125. So what is my profit? 25. So if this is my profit, then what is my GP ratio? GP ratio is what? Profit upon sales. Gross profit upon net sales. Net sales we generally takes here. If sales return is given, then we take that net sales. Otherwise, we'll simply take sales. Okay. So profit upon sales. So what is profit? 25. What is sales? 125. So what is my answer? 1/5. So 20%. Isn't it? 1 the 5 is into 100. So 20%. So that is my answer. Isn't it? Simple one. D. Yeah. No, no, no. See, this will not happen. Will they cut the increment also? Nothing. Nothing will happen like this. It was just a thought brought in at that time. Okay. It won't be there for long. It won't be there. Otherwise, everyone will revolt against this. What will happen? I'll tell you. Important. If they'll bring such thing like this, what the bankers will do? Banker will say, anyhow, I have to give back the certificate after 5 years. So better is I don't give. Bankers won't apply. So that's why they won't bring it as such. As of now, what the thought process in future will be, we don't know. Okay, as of now, that is the thought process. Forget it. Okay, so you be confident about it. Okay, you guys, you be confident. Once you have cleared CIB, it will be there with you for lifetime. You be confident about it. Okay, so don't worry about that. So once cleared, it's cleared. Double increment, go on and on and on. Okay. But one thing is clear, CIB will be required in future as a basic course. Remember this. CIB will be required in future as a basic course. Why? Because the knowledge which CIB gives is very extensive for banking, and bankers do require this knowledge. Because if you have to stay in this commercial world today, in the financial world today, you have to be abreast with the latest technologies and latest knowledge. Okay. So let's move on. One more. Okay. Determine the working capital turnover ratio. If current assets are 1,50,000, current liabilities are 1 lakh, and sales is 3 lakh. So what is the difficulty in this? Yeah. What is working capital ratio? Net working capital we'll call it actually. Okay. So what is the, yeah, net working capital ratio in that case? Who can give me? Yeah. This ratio is a bit reverse one. Okay. See here, working capital ratio equals to sales. Remember, it's a reverse ratio. Sales upon net working capital, NWC. Always remember, it's a reverse ratio. So sales is given as what? 3 lakhs. What is net working capital? Net working capital means total current assets minus current liabilities. That is always called as net working capital. See, here, there are two types of working capitals. NWC, net working capital means current assets minus current liabilities, and gross working capital, GWC, gross working capital equals to only current assets. So gross working capital is current assets, net working capital is this gap. Okay. So now, what is my this working capital ratio over here? WC ratio equals to 3 lakhs upon what is this? 150 minus 1, right? So 3 lakhs, I'll write it full year, isn't it? 3 lakhs upon 150 minus 1 lakh, so 50,000. Right? So what is my answer now? 6. 6. So this is my answer, B, isn't it? Clear, everyone? Yeah, B is the answer. Yeah. Net revenue, net sales here. Revenue, sales, it means one and the same thing. Always remember. Good, Shravani, you have answered it correctly. What is the ratio basically? Working capital ratio means sales upon working capital. So generally we take net working capital. Okay, that's why it's given over there. If in exam they want gross, okay, so what will they do? They won't give current liabilities over here. So there you take only whatever is given. Okay, chal, move on. Next one. See here, many of you might have found this in this class that what interesting part is you have many things which you have learnt up till now in school, colleges, as well as in JIV. Many things might have been questioned by you now in your minds that what is this? Because the questions which we raise over here, right, they are based basically on the logic and the facts. So that's why many of you might have questioned yourself that whatever I have learned, is it okay? But the remaining remember one important part: learning is not everything. But then also I also give more attention to learning also. Why? Because there are certain things which you have to learn totally. Ratios, these ratios, when you learn it 1,000 times, then it becomes a daily habit for you, and then you can start working in the banks also in that case. Means in the banking also you can start working on in those aspects, means these ratios, lending, everything. Okay. So what is this overall profitability ratios are based on? What is this overall profitability? Remember, keep it very simple. Overall profit. When will I say overall profit? It means that whatever I have invested, okay, versus whatever are my returns. If I have invested 100 rupees, right, 100 rupees I have invested and I am getting, let's say, per year around 12 rupees. So what will I say? My overall profitability is returns is 12 rupees and invested 100. So 12% I'll say, isn't it? So that's the way it is calculated. Returns upon investment. So overall profitability ratio is based on what? Investment, sales, both A and B, and none of the above. So it will be based on what? Returns, investment, it will be based on sales. You say, sir, sales is not there. I'm talking of returns over here, means net profit. But from where will net profit come? Net profit will come from sales only. So it is totally based on both A and B, right? So it is based on A and B. Simple, isn't it? Got it? Answer is C. Got it, everyone? Simple, isn't it? Move on. Let me check if there's one more problem. Yeah, there are 2, 3 problems more. Yeah, 2 problems are there. We'll solve them and then we'll stop. Okay. Stock is considered as a liquid asset, as any time it can be converted into cash immediately. Is it true or false? Yes or no? Stock is considered as a liquid asset. So is stock a liquid asset? Everyone? Who can answer me now? True or false? Stock is a liquid asset? Stock. What are liquid assets? What were the two liquid assets? Liquid assets were only two, cash and debtors. Stock is not a part of liquid asset. Stock is a part of current asset. Okay? So, simple. Answer is no. Isn't it? Answer is no. Okay? Next one. Which of the following is not included in current assets? Now, this is simple. Not included, okay? In current assets. Debtors, equity, cash at bank, and cash in hand. So, what is not included in current assets? Who can answer? Not included. Kamlesh, you are right. Anil, you are right. Sarda, you are right. Geeta Rani, you are right. Yes. Almost everyone is right. Answer is equity. Equity is not considered under current assets. Yesterday I showed you, right? Those four parts. This is asset, right? Current asset. And here it was long term liability, right? LTL. There were two parts in this. Inside, no, outside was over here. Oh my god, even I forgot this. One sec. This was outside above. Outside means that bank loan and bonds, everything, right? And inside means what was that? It had three parts, right? What were the three parts? Equity, net profit, and reserves, right? So these were the three parts of inside. So equity is a part of what? Equity is a part of long-term liability, not a part of current asset. Okay. So the answer is B. Equity is not a part of current asset. Remaining everything is there. Debtors, current asset. Cash at bank, current asset. Cash in hand, current asset. In fact, these are liquid assets, right? But remember, current asset is this much and liquid asset is this much. So liquid asset is a part of current asset. Always remember, liquid asset is a part of current asset. Okay. Chalo, we'll stop over here. By the time everyone's here, those who are watching it on YouTube, kindly note you join the classes immediately because only one or two introductory sessions are remaining now. Tomorrow, I think so. Tomorrow is the last session. Okay. Afterwards, you'll be there are paid classes. So I would always suggest you all guys to join the paid classes immediately. Okay. So for those, how to join it, I'll tell you. Okay. It's very simple. So just go to Adda 24/7. If you are having the app, I would suggest go on the app. Okay. Yeah. Thanks, yeah. Thank you, guys. Thanks for sharing the time also because that is also important. People don't share time for good things. People share time for all that music and dances. Okay. So go to Adda 24/7. Click on CIB 23. Okay. You'll see the batches. Click on this batch, English batch. This is the batch we are talking of, right? You'll see the details, date, days, timing, everything. Study plan is there. So read this, okay? Go on. I'll tell you main recorded videos are available. So what happens is if you get out, get any problem, you can't attend the classes. So in that case, you can definitely come back to it, okay? Click on this more offers. Put the code Y432. Y432. It's here. Here you'll get 80% discount. Right now you're having 78%. Then you'll be having 80%. Click on apply. See this 78 turned to 80. So the amount is now 4799. Such a huge discount you're getting, and this is for your lifetime matter, man, isn't it? Go for it. Also, I would suggest one important part over here. You can go for the Mahapack also. Mahapack means 15 plus batches per subject. Okay, good one. That is also CIB. Click on CIB ka Mahapack. 15. See this 15 plus batches for this ABM, BFM, ABFM, BRBL, everything. Okay. Again, recorded sessions are available. All these things you can read definitely. Important is this fees part. Okay. Let's come to the money part. See this 7919. Click on more offers. Put the code Y432. Never forget this code Y432. Click on apply. Look at this. 35,996 reduces to 7,199. That also validity is 12 months. 12 months is a huge period, man. Means divided by 7,200 divided by 12. Okay, you get roughly what? 600. Divided by 30, 20 rupees per day. Divided by these batches, 15, 60 batches. So 30, 50 paise per batch, isn't it? What is it? And this is for your lifetime. Go for it. I would always suggest everyone to go for it. Okay. Yeah. Bond valuation is not there in the new syllabus. They have removed it. That's why. Otherwise, I was going to take it. I have not taken it because it's not there at all. Why should we waste our time? Okay, we'll take it in a paid class someday. Okay, because it's not there. That's why I didn't take it. Hello, bye everyone. Bye everyone. Yeah.